Welcome to Between the Lines, the podcast that dives deep into the stories redefining Asia Pacific's reinsurance landscape. Recorded here in the newsrooms of InsuranceAsia News in Hong Kong, I'm Mithun Varkey, Editor-in-Chief for InsuranceAsia News, and in this episode, we'll discuss the results of the 1/7 renewals, wild weather events in Australia and New Zealand and in China, and some exclusive people moves that we reported on in the past couple of weeks. We'll also bring you insights into the stories that we're working on and leads we're chasing. Our special guest for this episode is Joel Pridmore, co-founder and managing director of MGA Frontier Global Underwriting. We tap Joel for his insights on the broader financial lines market in Australia, Asia, and in London, as well as talk about emerging risks around cyber and crypto insurance.
I think there's always a misnomer that you have to have 100 years of data to be able to write something effectively. I'd completely disagree with that. Perhaps in home and contents or motor or something like that, that might be true. But I think the way that the world is right now, we've got two active wars on the go. We've got a very, very volatile, political environment. We've got a very fragile economic environment. The world is not what it was even 5 years ago or 10 years ago. So I think you need to be dynamic and up to date with how you're assessing risk and pricing it appropriately.
As always, I'm joined by the InsuranceAsia News editorial team. I have with me Deputy Editor Andrew Mullen.
Good to be here.
And reporter Joan and Nguyen.
Hi, Mithun and Andrew. It's good to be back.
The previous episode was the last time you heard from Christina Sperlich in this podcast. She has moved on from InsuranceAsia News, and we wish her all the best. So, Andrew, Joanna, it's been a pretty hectic start to this week, despite the holiday in Hong Kong. Let's kick off with the July 1 renewals. Joanna, you've been leading our reporting on the 1/7 renewals. Tell us more.
Yeah, so reinsurers have been quite clear that they are still looking to grow. That's what Gallagher CEO of Australia and New Zealand, Heather Bone, told me in an interview right ahead of the close date of the 1/7 renewals. She said that risk-adjusted rate reductions are generally between a 7 to 15% mark across the Asia-Pacific. Core retentions generally held steady in dollar terms. Nat cat losses were benign overall as well. In Australia, we had the powerful ex-cyclone Alfred, which hit Queensland in March, and it cost so far nearly $1 billion in claims, according to the Insurance Council of Australia, ICA. But Heather said that these losses mostly affect the insurers, not reinsurers, as most of these losses were small, such as food spoilage due to power outages, instead of significant property damages.
What was the demand from cedents like for reinsurance? I mean, at 1/4/1 in Asia, we saw demand sort of flatlining. What have been the trends in Australia and New Zealand this time?
Yeah, Heather also said that while supply is abundant, demand is falling because a lot of consolidation that is imminently occurring in the Australian market and has been approved by the Australian Competition and Consumer Commission, ACCC, which is a government authority. So some recent deals that we know are RAA Insurance acquisition by Allianz and RACQ's deal with IAG. So these consolidations are expected to lead to a decline or flat in demand for reinsurance.
Mithun, you've been across this also. Have you noticed any themes that have jumped out to you?
I've been talking to the market as well, and one thing that seems to be happening is the return of aggregate covers. The past couple of years in the hard markets, aggregate covers had nearly disappeared, especially in Australia and New Zealand, where there were massive frequency losses in the past few years. But with the market softening and reinsurers looking to grow, it seems that there is more appetite for aggregate covers. Of course, there were structured solutions and ILS and other ways to provide protection for that frequency layers. But I think the key remains that reinsurers are looking for underwriting discipline from the primary insurers. So at this point, it's still very much on a case-to-case basis. So it's available, but it's not available for everybody unless you can show strong underwriting discipline and pricing increases.
And as with most things, we would ask, what was the impact of Donald Trump's tariffs on the renewals?
Barely any direct impacts on the renewals discussion. I mean, obviously, both countries have different tariff impacts, but it's not been a question that at least Gallagher is been getting from reinsurers. other widely discussed topics in the past, like inflation or PFAS, did not shape the discussions in this time around either. For PFAS specifically, Heather said that reinsurers either have understood the risk that insurers may be exposed to, or they've got the right exclusionary language in place. So they have come to a landing with their cedents that they are comfortable with.
Great. I think that's a good wrap up of what's happened in the 1/7 renewals. Moving on from the renewals, I think we cannot end this podcast without having a discussion about the cat events around the region. And we've had a few over the weekend, both in New Zealand and Australia, as well as in China. Andrew, you've been keeping a keen eye on what's going on around the region. Can you tell us?
Yeah, so Joanna touched on the Cyclone Alfred losses. The figure we quoted there came from the latest numbers from the ICA, which looked at 3 major events they've had at the start of this year. So Australia's already had a tough start to the year, and as you mentioned, they're having another go right now. Just to recap, there was the mid-north coast and the Hunter floods. There was over 11,000 claims for that. Ex-tropical cyclone Alfred, over 125,000 claims. And New Zealand floods in February, over 11,000 claims. So added together, this means there's been $1.2 billion in claims in just those 3 events at the start of the year. The ICA actually said that this bill wasn't as big as they expected, but they know many communities are still recovering. And speaking of recovery and communities, New South Wales is being hit again as we speak, pretty much. And this is the big word that everyone's jumping on, this bomb cyclone. This has brought rain, flooding, damaging winds, 60 to 80 kilometers per hour to New South Wales. Some cases this been hitting 100, 120. And now obviously it's too early to tell the damage, and the people are still just trying to be safe right now. And there's some repairs going on, but we're not going to see anything for a few days, but we'll keep an eye on that and see what the impact's going to be. And over in New Zealand, they had a bit of a tough time at the start of the week or end of last week as well. It seemed like across the whole country there was tornadoes, there was heavy rain. That's already going to be millions of dollars, New Zealand dollars worth of damage as well there. So tough time for Australia and New Zealand right now.
That's right. I think in New Zealand, both the North Island and South Island seems to have been hit. I think there was also a flooding in China. I mean, this is from the remnants of the Cyclone Wutip, which we had covered earlier on. Joanna, is there anything more you can tell us about?
Yeah, so the last few weeks since June, central and southern China has been hit by record rainfall that leads to flooding and evacuations. The extreme flooding was at some places reported as unprecedented over the last 7 years. So the latest Aeon's weekly CAT report said that the flooding is the result of the combined effects of monsoonal rainfall fueled by rising summer temperatures and the remnants of tropical cyclone Wutip. The event is ongoing and the total damage is increasing. The report said that considering the current extent of the damage, it is almost certain that the total damage could reach hundreds of millions of USD.
Yeah, it's floods on one end and there is extreme heat on the other end. As with the bomb cyclone that we are seeing in New South Wales, we will see more climate-driven events around the region. I just wanted to talk about a couple of interesting people move stories that we had written last week. I think the most notable one in the region was the senior leadership changes at Hong Kong insurer Nova. So Nova's managing director, Patrick Chan, who's been running the broker, which is one of the largest insurance brokers in Hong Kong. I mean, domestic insurance brokers in Hong Kong, they're not part of one of the big global brands. Nova has been led by Patrick Chan for nearly 2 decades. So Patrick decided to retire, and they have announced some leadership changes. So Rebecca O, who takes over from Patrick, is the managing director. But they're also announcing, as part of that leadership restructuring, we'll see Conrad Wong, who is the CEO of Nova Beijing, their mainland China business, and Joseph Lee, who is in Hong Kong. Both of them take on additional responsibilities as chief broking officers. So it's really a transition time for Nova. I should also mention that Patrick had a retirement party last Friday, and I was invited to it. It was quite a spectacle. I think that's one of the biggest insurance gatherings that I have seen in Hong Kong in my last few years of covering insurance in the city. It was really stellar turnout. More than 200 people turned out to say goodbye to Patrick. So it was quite an event. There were a couple of other interesting moves as well around the region. I think one notable story that we did exclusively was Samsung Reinsurance, the reinsurance arm of the Korean fire and marine insurance giant Samsung, has hired Si-Liang Lau from Gallagher Re to head their new cyber and casualty business. This is part of their ongoing expansion globally. So it'll be interesting to see what Samsung Re has planned in the coming days. Also, we saw with another story with Sompo in Hong Kong has appointed a new CEO, Alistair Walker, who was their regional head of distribution. He's moving to Hong Kong as their CEO, taking over from SK Lee, who has led the team for a really long time now. Moving on from our exclusive People Move stories, I want to talk about one of the analysis pieces we've done recently on the fine art and specie market. Andrew, I know you're not the reporter on this story, but you edited the story. Can you tell us a little bit more about the trends in the fine art market now?
Yeah, Christina certainly signed off with a bang with this one. Nice in-depth piece. Spoke to so many people to get a real feel of the market. And in general, this showed a very high demand for this type of cover in the region. The interesting thing that jumped out was it highlighted that extreme weather has emerged as the main risk for this sector. Now, you wonder how's a painting or a statue going to be affected, but this actually focuses mainly on when they're being transported. And there was a specific mention of when things are being shipped by sea. That's obviously a cheaper way to send things, but it does expose these valuable artworks, paintings, sculptures to the sea elements, salt and moisture. So that was one thing that jumped out for that, but definitely worth a look on the website for more on that, because there's a lot more to that than I can mention here.
That was quite an interesting story and a very in-depth look at the fine art and specie market in the region. Now let's talk about what we're working on in the coming days. Before we start on our leads, I just want to talk about a webinar that we're doing. It's on the reinsurance renewals and the impact of the market transitioning. It's got a great panel. We've got Mark Morley from Gallagher Re, Blake Dimitrievich from Hanover Re, who's the CEO of Australia and New Zealand for Hanover Re. We've got John Ju from Swiss Re and Kanishka De Silva from Fitch Ratings. And I'll be moderating the webinar. The webinar will be over by the time the podcast comes out, but you can catch a recorded version of the webinar on our website, InsuranceAsiaNews.com. And on to our stories. Joanna, what are you working on this week?
Yeah, so I've been looking at different business lines, for example, medical malpractice and product recall. So this time I'll be digging into construction. With expected increase in investment in renewable energy and infrastructure projects, we plan to write on the construction insurance market and how pricing and capacity trends for builders' risk, liability, and professional indemnity will evolve. So this will be my focus this week.
Great. You're digging into the construction market. Andrew, as we are witnessing the bomb cyclone ravaging the eastern coast of Australia, you've been looking into the cat market. What are the stories that you're working on?
Yeah, so while you referred to this recent event in Australia as a bomb cyclone, it actually falls outside of the cyclone season. So it's not an official cyclone. That's more a term used by weather experts because of the immediacy of how it was created. The Australian cyclone season is finished. There were 12 tropical cyclones in the 2024-2025 season. That's just above the average of 11. And that is the highest since 2005-2006, which had 12. The big highlight is the losses from Alfred, which we mentioned. And as part of this story, I've spoken to the Insurance Council of Australia, Bureau of Meteorology, and Insurer IAG to get their take on the season that's just gone and what we've got to look forward to in the next season.
We'll look forward to that story. I do have a few other stories that I'm chasing. I have an interview with William Ho, who is the CEO of MS Amlin in Singapore. I'll be writing a story on their regional plans and on other exclusive stories that we're looking at. I've been chasing an acquisition that's going on in the Hong Kong broker market. Hopefully I'll have more for you on that very soon. Okay, that was a great meeting. Thanks, Andrew. Thanks, Joanna. There's a lot more to work on. Let's get to it.
Thanks, Mithun.
Thanks.
Our guest today is Joel Pridmore, co-founder and managing director of Frontier Global Underwriting and MGA, focused exclusively on the global financial lines and cyber insurance market. Joel joins us from London, We have an interesting chat about the state of the financial lines market in Asia Pacific and the impact of the ongoing softening and the macroeconomic environment. We'll also talk about emerging risks around crypto and cyber. He's got some fascinating insights. Have a listen. Hello, Joel. Welcome. Thank you for joining us. It's pretty early hours for you in London.
I'm Mithun, very to be with you, and thanks for having me.
Let's start with a little bit about Frontier Global Underwriting and what your focus on the region is. Joel, could you tell us the Frontier's positioning and what is it that you're looking to do in Asia Pacific?
Yeah, sure. So we founded Frontier, my business partner and I, in 2019. We started trading in February 2020. So got a fair bit of operating history behind us now. We're both Munich Re before founding Frontier. And before that, major internationals, myself, AIG, Liberty and Zurich. So kind of had this idea and drive to do our own thing, hence founding Frontier 6 years ago now. So our positioning in APAC is obviously, myself being Australian, we have an Australian office, a local office in Sydney. We're London headquartered, so the bulk of the team is in London, but we have an office in Sydney serving Australia and New Zealand mainly from Sydney. And I service the APAC region, broadly from London, being kind of Hong Kong, Singapore, Thailand, Korea, Japan, the major regions. Our focus is, as you say, financial lines in APAC. That's a combined kind of portfolio of investment managers, insurance, BBB, so crime for banks, D&O, both commercial and financial, PI, both commercial and financial. Then also cyber. We've also recently developed a kidnap and ransom offering, which has had some early success in the region as well. So that's pleasing. And as you know, and as we were talking about previously, we also write some crypto and digital asset and blockchain business as well, with Singapore, Hong Kong and Sydney, as well as recently New Zealand being a real target there. So that's the bulk of our portfolio in the APAC region.
Great. You do have a big focus on financial lines and across different products, which kind of has been, and the financial lines broadly has been on a prolonged sort of soft cycle. And we've seen that across the world and more so in Asia Pacific, certainly in Australia. There's a lot of capacity. There's a lot of new players coming in. How's the landscape for the business evolving in the region in terms of pricing, in terms of claims, and of course, new capacity?
I think that's an interesting dynamic. I think it certainly has softened significantly since probably midway through 2022. So the pandemic really was a shock to the insurance market globally, but particularly financial lines, which had been in a long period of softening, particularly classes like directors and officers. So, overnight almost there was significant increases. It was interpreted by some, I think, hence the influx of capacity as, over adequacy, whereas I think it was just getting towards sustainability and adequacy before the drop off. So I think the influx of capacity was driven by kind of a belief that financial lines market is overly profitable due to those corrections, which I think was probably a misinterpretation. Since 2022, you're right, a big influx of capacity, both Lloyd's and also locally in all regions around the world. That's contributed to pretty significant rate pressure. The kind of other side to that is we're now in that real tail section of COVID or the pandemic. So, obviously, the pandemic had a lot of stimulus from governments around the world. So there were a lot of businesses operating that probably would have failed other than the pandemic, ironically, other than the pandemic occurring. So, now those businesses are kind of been zombies and they're now failing. Construction's a big one. Construction's a big issue in Australia, particularly hospitality, another one. But what that leads to is, these attritional kind of claims, not really large class actions per se, but, insolvent trading type claims, which are dangerous, particularly for B&O. We've then got issues with, the shaping nature of construction industries contributing to professional indemnity claims for, project issues and cost cutting and issues on delivery of projects. Crime's an interesting one as well because, during remote working, obviously had an impact on the prevalence of audits, in-person audits and excluding on audits. Now that that's all changed, that there's a lot of losses out there all around the world. So I don't think that the environment is kind of conducive to the rate reductions that are occurring, but it's just the nature of cycles, isn't it? And I think there's a lot of claims of activity out there that probably hasn't materialized. And the other big one is the under-reserving. So I think there is some under-reserving going on that perhaps, is always happens in this industry until checks are cut and claims are, crystallised, that results aren't probably recognised. So I think there's a few dynamics at play right now that's going to see an interesting kind of 12 to 24 months from now. And, it'll be interesting to see what occurs. So, there are obviously big claims out there, class actions in Australia, your green seal, obviously a UK issue, but then issues around Insurance Australia Group and the surety and bonded credit company that were insuring those factoring receipts, and the issues there around coverage or lack of, which has triggered some pretty large litigation in the federal court with some pretty powerful and aggressive plaintiffs involved. So, that will be interesting to see the outcome of that. Also, some pretty systemic issues within the superannuation industry in Australia regarding governance, and both regulators, APRA and ASIC, are pretty hot on that. Yeah. Then you can go to, other things like greenwashing is a big, issue at the moment around ESG and what that means. And obviously the talking up there before we came on, and cyber's always bubbling along, and had a recent one this morning involving Qantas. Interesting to see what impact that'll have, because they will, likely buy a significant cyber tower as well. So, I think while rates are reducing, there's certainly no lack of potential claims or claims out there in the environment.
That's interesting you say that, because, it seems almost like there's, you mentioned that more claims coming in, there's the potential claims out there, and there's concerns around under-reserving. Seems to be more litigation and more regulatory action. That seems like the perfect storm for the industry, especially in a soft market. Do you see that this will play out in the next 12 to 18 months, and that could probably mean the bottoming out for the sector?
Yeah, I think you're right. I that's what I think. It's always hard to have a crystal ball in this industry, particularly. But if you're putting logic to it, I would say that. I think that the bottoming out of the rate reductions has to occur at some point, because there will be some realisation of quite large losses and results that will put some pressure on, a lot of players out there. So let's wait and see. But, I think the dynamics at play are pretty self-evident, aren't they, about, what is likely to occur.
From Ask, are there, you mentioned D&O and some of the, PI lines, etc., where there's significant softening. Are there sort of pockets within the financial lines, the broader financial lines market, that you still feel that the rates are adequate and there's potential for growth, especially in APAC and Australia?
I think the key in a market like this is risk selection, right? I think that pricing, also adequacy always has to be there, but risk selection, quality of client, engagement of client is always our priority. For us, it's about building a portfolio of risk that's able to sustainably pay claims in the event that these insured or our clients need it. That's our goal. That's always been our goal. I think when you're building portfolios without any recognition or kind of strategy about what your end game is, then that's an issue. I think, for us, it's always been those little niche areas, those kind of esoteric, misunderstood sectors or clients with industries. We tend to not write sectors per se. Like, that's not our strategy. It's more writing individual clients. So, if there's a client in a certain industry that has a stigma attached that we can get comfortable with, regarding the people involved in the strategy of the business, the operations, the financial metrics, etc., then we'll certainly look to support. And that's been our kind of modus operandi since we opened. I think even challenging is that even sectors or industries that were perceived to be higher risk and less saturated, and you talk of digital assets, as a lot of players out there now that have big top line budgets and perhaps are chasing a lot of premiums with those budgets that are now wading into classes they probably don't have experience in. So that's always challenging. But as I say, you stick to your knitting. That's always a good game plan, and managing cycles is what this industry is all about. And you have to do as well in soft markets as you do in hard, and that's what we aim to do. So right now we're just working harder than ever, looking to support our clients, looking to work with them on any challenges they have, looking to understand current trends in their industries and sectors that we can assist with, and issues arise, then we're there to assist from the claims perspective. So that's kind of our strategy right now.
Interesting. I mean, you mentioned we just today morning we heard about the data breach at Qantas, and you mentioned cyber and crypto risks that you write. So there are emerging risks, part of the broader financial line space. Especially with cyber, we have seen in Australia has been a big issue in Australia around cyber. There's been a lot of events and some regulatory changes recently. We've seen a lot of litigation around it. How do you sort of assess, price some of these emerging risks? What's your view on the products out there and pricing and claims?
Yeah, I think for me it's kind of like an evolving dynamic process. My involvement in particularly digital assets or crypto, whatever you want to kind of label it, has been almost 10 years now. So I've seen a whole kind of cycle of players, regulation, attitudes, scandals. So I think for me it's all about just, again, picking the right clients and putting a sustainable price on it. So you're there for the long term. We want to be there for 10, 15 years, not for 1 or 2 and jump out. So that's our key. I think there's always a misnomer that you have to have 100 years of data to be able to write something effectively. I'd completely dispute that. Perhaps in home and contents or motor or something like that, that might be true. But I think the way that the world is right now, we've got 2 active wars on the go. We've got a very, very volatile, political environment. We've got a very fragile economic environment. The world is not what it was even 5 years ago or 10 years ago. So I think you need to be dynamic and up to date with how you're assessing risk and pricing it appropriately. And for us, it's just about taking aspects of everything, like how would we price a traditional D&O portfolio? How would we then price an emerging technology part of that, and just taking bits and pieces and trying to work out what we believe we would need to form a sustainable portfolio in these kind of nascent or emerging industries. And I think that's scientific to a certain extent, but there's some art to it as well. But key to us is about being there long term. So for us, it's getting pricing and adequacy right, but also risk quality and wording control, and also understanding intimately what the clients do and their operations, so there's no surprises. I think that's probably the way we go about it.
I mean, interesting you mentioned models. I mean, obviously some of these emerging risks, there aren't enough models out there. In many cases, we don't even know what the risks are really. Do you have any rule of thumbs to go by? How do you pick the right? You mentioned you want to select the right risk. Are there any rule of thumbs that you follow? Is there any way that you can identify the right risks?
Yeah, I think for us, it's about just understanding the client and knowing them intimately. I mean, anything, we aim to meet as many of our insureds as we can. I think for us, it's about really doing the job right the first time at the first initial engagement, and then following through, consistently at renewal or, half yearly, or just understanding the client's evolution in their operations. Yeah, as I said, I think end of the day, a lot of these crypto clients or digital asset client, blockchain clients are buying traditional classes of business. It's just that they're, the operations are, non-traditional. So there's aspects of, as I say, underwriting a good D&O risk across any sector is, follows the same rules per se. You just have to understand what the different models and inputs are in interpreting those rules. So from that perspective, we take a lot of our experience across all lines of business and sectors. And as I say, I mean, you have to be very intimate and committed to a new and emerging sector to be able to understand it intimately and to be able to underwrite it appropriately. So, as I say, our experience in this space spans close to a decade now, and that's pretty early on in the sector's evolution. And I think we put the time and effort into it, which is the key to our value proposition. And I think anything nascent like artificial intelligence, same thing. We're putting time, we're putting effort, we're putting research into it. We're wanting to soak up as much as we can from every individual client that we meet, and put all of those little parts together to be able to build our knowledge and take it forward. So it's kind of an ongoing, constant learning exercise, which for us is really the rewarding part of our job, is getting to continually learn. We're not sitting still, and we don't have a stagnant kind of focus. So for us, it's just that continual learning that's key.
Sounds more of a bit of an art than science, picking the right risk, I guess.
It's a combination of both, yeah.
Interesting you brought up AI. I mean, quite a lot of conversations around AI and the risks associated with that. There's, talk about silent AI. And how do you see the sort of AI revolution, and what's the sort of impact on risks and the business as a whole?
I mean, it really is a revolution, isn't it? Every single day you're hearing something. For the insurance industry, I think the silent aspect of it is real as well. Even traditional professional services firms are now embracing it. So I think, at some point wordings, well, they are, and the brokers and underwriters are doing it, but wordings have to catch up. You have to acknowledge that, or understand what the usage is of AI, and then ensure that wordings are, tailored appropriately so that there's no exclusions per se. It goes back to the crypto and digital asset industry too. I mean, and I've seen it, constantly, that there's D&O policies or PI policies out there covering players that are clearly involved in that sector. And with cryptocurrency exclusions in the terms, you think like that is just not fit for purpose. I don't understand how that can be underwritten like that or broke like that. I mean, that's just force. So, if wordings aren't kept up to date and kept fit for purpose, then clients are not getting the service and the product that they require. So, I think that's a point to make as well, is that wording and coverage, when it's done properly, has a premium attaching to it. And sometimes cheap is for a reason, because it's cheap and it doesn't work. So, buyer beware out there.
From your perspective, looking forward, is there anything that worries you? Any concerns around some of these emerging technologies? How do you see the market evolving in the coming few months?
A good question. I mean, from our perspective, nothing is really worrying per se. I think, everything is any challenge is an opportunity from our perspective, any client type. But from that perspective, it's exciting, to where the world's at. My major concern is just, as I said, the propensity for the fragility of this market to cause issues for insureds out there. Saw during COVID how quickly things changed, and that was not long ago. So, I just hope that, sense prevails at some point, because, it's great short term with rates declining, but long term, when there's insurers or clients out there that require certain classes of business for their licensing or the operation to satisfy contracts or to attract good directors to their boards, that suddenly everything dries up and that can't be sourced. Well, was the cheap price really worth it for a year or two, or was it better just to have a sustainable, adequate kind of approach to insurance buying and underwriting? So, my concern is there might be some left high and dry, which is a real shame, because, the industry is so important to the overall economy. And as I say, I just hope at some point sense prevails and, we get back to some type of sustainability approach to the pricing risk and underwriting risk.
Great. I think the industry would agree that, the softening has gone on for too long. It was fantastic talking to you, Joel. Thank you very much. It's been very informative. Thank you for your time.
No, my pleasure, Mithun. Thank you.
That's all from us in this episode of Between the Lines. We'll be back again in 2 weeks. In the meantime, you can connect with us on LinkedIn. Make sure you're subscribed to our daily and weekly newsletters delivered straight to your inbox. And of course, we'd love to hear your feedback on the podcast. email us at editorial@insuranceasianews.com. I'm Mithun Varkey. Thanks for listening.